All right, there's a few things going on here. Number one, at 9 Central, we had 58 evens is where we were when the ISM number came out. I put a yellow verbal journal dot to show you ground zero. It often works as subsequent support when it's a bullish release. All right, so the market rallied to 63.5, came off around 9:15 Central, and it's trying to coil, looking for a reason to qualify this as a long. Now, let me pause it a second. You see this red edge zone come in. Someone had asked when to buy it. Instead of just laying a bid down there and playing price at 58 even is going to be support, you wait for order flow to potentially qualify a better location. It does it right here when sellers come in on an edge zone and they start to breach it. I don't want to oversimplify it, and I don't want to make it sound easy. It just makes it easier. That's one thing to remember when you're trying to use anything to qualify your trade. Now, another thing happens that generally is good is when new passive buying comes in right there. You see that blue? I'll pause it. This blue came in, which is a heat map feature on Sierra, which showed not just some, but a lot of resting bids. If you looked at your dome, that had come in at 58 even for like 1,000 and 1,500, and they kept growing it. So let me play it again as it goes through. This is around 9:15 Central. A few things at play. Number one, ISM got us bullish. Number two, it come back to ground zero, which is usually support, 58 even. And you got, let me pause it again. You got aggressive sellers that start to get taken out here. You got aggressive buying that is holding it as support, but then you also got new buying passively that comes in below. So aggressive sellers can't get it to go down. Aggressive buyers step in. Passive buyers also come in below. Now, this was a pop that's okay, couple points. Then it gets into this pretty awful chop and coil that lasts a while. It's gonna go through a little faster because I'm running at a faster speed. But this became where you could be slightly bullish, bearish, bullish, bearish. Didn't mean you have to be long and short, long and short. It would have been very difficult to open up this trade and stay in it for the eventual rally we had to, right now it's 64 halves is the session high. It would have been really hard to stay in this particular trade all the way to 64 half, but at least it's a nice head start, and there's no randomness as to why you would qualify this. Because someone had asked, okay, 58 support, what could get you in? So it's not always 58 the price you get in. You don't just lay resting bids to buy support, resting offers to sell resistance. That's not going to ever be a consistent, successful strategy. So this market, let it just keep coiling, and then what we'll do is I'll show you what had happened that finally broke it out to the upside that didn't have a lot of people on the boat. When you don't have a lot of people on the boat, it floats better. It goes faster. If you watched one of my YouTube videos, I talked about the story of the boat. Too many people are on it. It starts to sink, and someone yells, we got to throw 20 people overboard. They're probably going to throw 30 or 40 people overboard. So in this case, this is the boat getting full, getting empty, getting full, and going back and forth, until finally, I'm going to shrink this chart down and bring up the NASDAQ and roll it back just a little bit. Finally, the NASDAQ was showing consolidation itself, right? And it was showing it with two swing highs up here. But then look at this. You got to be able to read this as a consolidation box before it breaks out, either to the downside or the upside. So what we said in the room live was above 58 buy stops in the NQ. And it's not coincidence that that's the pop you got. And when you got this pop right here around 10 Central, let's continue. They're still continuing to play out and come back. Let's actually go 10 times the speed so we're not sitting here all day. Around 10 Central, you see the time here at the bottom. You're going to see the ES essentially follow the NASDAQ. The NASDAQ left its consolidation box first, and then the ES said, okay, we'll come and play. And 60 quarter was right around the price. That was buyable, especially if you're bullish. And it was a heatless trade, pretty effortless. And once it went, especially that second drive up in the NASDAQ, 62, 63, 64 half was the eventual target. So it's still trading. Let's pause it. Let's go up 30 times the speed so we're not playing around here. Now you're going to see it. It's still, listen, this took another half hour, but we're winding through it a little faster. You see, just go back and forth. It can't get through that big order at 58 even, but it also can't rally above 61 even. And it was closer. It looks like it's going to break out now, and it comes back. It wasn't until the NASDAQ showed its hand first. Yeah, so when someone asks where are the passive buyers, number one, you see it on the chart where the blue showed up, but you also see it on your dome. 58 even was eventually a big order for like 2,500. They're not there anymore. They probably pulled it, or maybe they did walk it up and just end up buying it, and they were part of the rally to 64 half. All right, so now is about the moment that right in here that the NASDAQ took off, just before 10 Central. It was right there. Let me pause it. It was right in here, right around 10 Central, that 60 quarters was the price. And it went, now it looks like it went faster than it did because I got it running like at 15, 20 times the speed. But this, it never got below where it started when the NASDAQ broke out of its consolidation box. And it was up, and away. This spike in here even came quicker. This spike in here was alongside, let me shrink this, was alongside this second spike. Look at the right, look at the right. See this spike right there? I'll open it up. This is a small consolidation box, re-rallies. And George even mentioned how it's starting to trade like a directional market from this crappy chop, right? So it'll chop a little bit and then go instead of this long projected chop that it had before it broke out. So that's why it's really important to identify and visualize when reading a chart the congestion areas, to start anticipating where buy stops are, maybe getting collected, or sell stops below getting collected. It's one of the very first things that when someone looks at a chart, other than high, low, open, close, bar chart, candlestick, and footprint numbers, it's like, hey, listen, this is up, this is down, and this is a consolidation box. Let's not kid each other. All this means is that people are trying to fight buying it and selling it, just like a basketball game. So that's our video for today, April 1st. The market eventually got strong again and rallied. Qualify the heck out of your opinions.